Well, good morning to you. This is Pete Najarian. We're doing the take here live as usual for Market Rebellion. Yesterday, curious day, definitely. The way the markets were shifting around and the volatility and the movement that we were seeing yesterday was certainly pretty extraordinary. We actually started off the day down a couple of 100 points. Not a big deal because of where we've run up to of late. And we've been talking about hitting new highs and highest levels of a close for the Dow and all the rest of that. So you wonder, when are we going to get some sort of a pullback? Well, we started to get one yesterday that, of course, later on really shifted and turned and burned. But we were down 200 early. We were down 400 in the first hour or two. And then we started to move to the upside. The one area that did stand out throughout the whole day were the financials. And the financials, certainly they were strong. And a lot of that had to do with last week and the Fed and the ability for repurchasing. And obviously, JP Morgan was the first to step into that field and redo their whole deal. And of course, that stock was ripping to the upside, but it wasn't the only one. And the financials virtually throughout the day, even with the markets down 400, they were still hanging in there pretty good. Now, there was a broad move to the downside yesterday. It wasn't in any one specific. If you look across and you look at all the various sectors, you had a fairly consistent move to the downside as we were sort of pulling back. But the real standout of the day absolutely were the financials. As I was looking at the financials and as the market was starting to come back and we started to see the financials start to lift, but Goldman Sachs up 6%. I'm looking over, Morgan Stanley was up about 5.5%, Capital One up about 4%. So you get the idea. Zion Bank was up. They really were the upside movers and held on for the most part throughout some of that pain early on. And then, of course, the markets turned, burned, they ripped to the upside. And it really was a pretty extraordinary day to watch. As a matter of fact, when we were on those lows, you look over at the volatility index, we had a volatility that was pushing up towards 29. And that was pretty significant, especially where we were just a couple of days previous, where we were in the very low 20s, and you get up towards 29 percentage-wise, a very explosive move to the upside. Still closed near 25, so call it about 15, 16% move to the upside. So that really was something. Now, yesterday, we talk about volumes all the time. Volumes weren't quite as good as the previous session, but 37 million contracts, still nothing to sneeze at. As a matter of fact, this consistency of being somewhere over 30 plus million contracts per day, just it really does tell the tale of exactly where we are seeing the growth and where the activity is. And that's something that has been playing out throughout 2020. And certainly it's been accelerating here in the final couple of months as we've watched volumes just continue to move to the upside. We're also talking about how the holidays that normally would slow down things, that is not happening at all. The participation is certainly there. As a matter of fact, yesterday, look at Apple. Apple traded just under 2 million contracts. We had Tesla trading 1.2 million contracts. NIO pushing well over 700,000 contracts. So you could see the theme, and you could see also how different parts of the market really did rip and ripped off the lows. It was names, it was technology specifically stood out, but also take a look over at biotech. New highs once again, up about 1.5%, a little bit more than 1.5%. So this moves that we were seeing yesterday, although we were getting hit pretty significantly early, and as I say, down about 400 points, boy, did we rip off of those numbers very, very rapidly as we started to push to the upside. And the roller coaster ride was certainly interesting, but the one thing that did stand out, and I see people starting to flood in a little bit with some of the Q&A. You're more than welcome to ask. We'll definitely get to that at the end of of what we're talking about here as far as the take, and I'll answer as many questions as we can, and then we'll move on. But so please feel free to do that. But what really stood out for me yesterday was the financials and on the unusual options activity that we were seeing there. We had, and I'll put it in the category, but Riot certainly did stand out. Square, Goldman Sachs, BBD, which is the second largest bank down in Brazil. So the combination of seeing that and seeing the leadership we were seeing from the financials, and we've talked about the financials in this huge move. You look at that, where the XLF was, where it is now, and the big move to the upside. So it's financials, but obviously some of the banks as well. But the consistency of the move to the upside is certainly something that does stand out. And we've seen the support of that with all of the call buying that we have been seeing in that particular sector. Very similar to what we had been seeing, and a little bit of a slowdown, but still seeing it in the material space and in the energy space, where we've had those huge runs to the upside with some expected pauses and maybe some pullbacks along the way as well, but certainly we've seen nothing but strong activity across the board in multiple different areas. And some, I would say those three specifically stand out, more so even than the industrials, even though the industrials had a pretty nice participation. Matter of fact, seeing a little activity, I'll give you this one, a little activity today in Caterpillar to the upside as well. So today, interesting start. Markets were essentially flat. Matter of fact, you look over at the Dow, it was flat, but you look over at the NASDAQ, not a huge move, but up about 35 points. And then quickly we watched this huge divergence of the movement, and NASDAQ moved a little bit higher. It was up about 35 points. And then quickly that started to move. Then it was up about 50 points. Then we were looking over and we were seeing this steady slip that was happening with the Dow, and the Dow definitely moving to the downside, down about 165 points. It's recovered a little bit off that. I'm not watching it right now, of course, but it was down about 120 last I looked. And meanwhile, you look over at the NASDAQ and that was up about 65 points. And once again, if you look at the Dow, only 4 stocks were in the green early. Specifically, what really stood out is Apple. And Apple has had this move. There's been so many different news stories that have been pushing Apple back up and above the 130 level, that yesterday and going into today, obviously it's the EV market. Everybody wants to be in the electric vehicles. You see what I talked about when I talked about Tesla and NIO in terms of the volumes that we are seeing in there as well. And we've seen it in other names as well, but certainly Apple, you always wondered because they've made acquisitions over the last few years, and you just kind of wondered, when will Apple finally jump into this area? And maybe along the way, will they make any kind of acquisitions that will position them even faster to get themselves placed in the EV market? So I think the combination of that, and we've had option paper in there. We talked about it last week. I was live on air talking with Scott at the halftime report. And he said, Pete, I know you've bought some calls in Apple. And I said, I just bought even more. And that was because we'd had some huge option paper that had come in there and acquiring more and more. And we've seen that again. We saw it yesterday. We're seeing even more today as we've watched a lot of the option paper and a lot of upside buying, and not so much in the spreads, just individual strikes and months that they've been, and weeks that they've been going to the upside and positioning for even more of a move to the upside. Apple still hasn't quite reached its highs, its 52-week highs, but it is getting closer. Today, last I looked, it was trading right around 134. I believe the highs were around 137. So it is pushing on that very, very quickly. So again, a broad move to the downside today as we are pushing to the downside. You had healthcare down about 0.5%. We had consumer discretion down about 0.5%. You had industrials down about 0.5%. What's not down is financials, and they're holding in there pretty well. They've been essentially fairly flat in a very red tape early on as we were starting to slip. And as I say, triple digit losses to the downside. Tech, that's been in the green. Obviously the leadership of Apple, but we've also seen some participation. We've got Peloton, you've got Apple, of course, Amazon, Tesla, Facebook, some of the semis, those are sort of pulling against what we are seeing with some of the positive moves out of some of the other parts of the NASDAQ, but a little bit of give and take, but far more of the give, because we are seeing a lot of movement so far early on in the NASDAQ. And that's something that certainly does stand out. So people are no longer, seems to be, even though early on yesterday, focusing on that new strain that's in the UK of the virus and all the rest of that. That certainly is on people's minds, but that is not what they are looking at today with some of the reaction we are seeing in the tech sector for sure, as that's really taken off and really rip into the upside. So let's hit a little unusual option activity. Yesterday, we had some activity, and I've talked about this. We've been waiting to see a little bit more and a little bit more from gold and silver. Are they going to start moving again after that pullback that they'd had? And we had such great paper in the SLV for a really long period of time, and it was right, it was right, it was right, it was right all the way up. And then finally, after a tremendous run, hit that pause button and then a little bit of that pullback, and we hadn't seen a lot of option paper in there for a while. Well, that changed last week. We'd seen some SLV that was certainly hitting, that was fairly decent size. And yesterday we see the junior miners, the SILJ, which is the silver junior miners hitting. Now, normally, as we talk about, we're not usually looking for the ETFs, but this did stand out. We don't see this very often, so it certainly stood out to me as unusual. But yesterday, they bought about 10,000 of the February 18 calls. Today, they added to that and bought another 5,000 to that. And so with the ETF trading at 1550 or thereabouts, and yesterday it was a little bit higher. Yesterday they were paying about 85 cents. Today they're paying about 73 cents, but acquiring more and more and more in terms of positioning for the upside and buying some time. We've talked about this, and the theme throughout 2020 has been extreme short term. A lot of weeklies, a lot of 2 week out, 3 week out, maybe a month out. It starts to seem like you go out 2 months and it feels like a leap, which it is not. But so the short term paper has been a consistent play throughout this entire year. Well, they're going out to February here, so they're buying a little bit of time. They're getting time for some of that upside to actually play out for a very inexpensive implied volatilities that we are seeing in there right now. So that's it for the take, but how about some of these questions? Because I do see it starting to fill up pretty good. Should we move to cash over the long Christmas weekend? I would say that in years past, that's been a bit of a trend that we have seen, people just taking a little something off the table. I don't know if we're going to be seeing that this year, just because we have not seen the normal option paper. We have not seen the normal trade as we've gone into some of these holidays throughout this entire year. And obviously going all the way back. I mean, we've been doing this, obviously pandemic in March. And as we've gone through one holiday after another, people are in front of their computers, people are trading. This is something I've talked about a little bit more and more, as far as we are seeing those volumes, but with those volumes, we are seeing also greater participation across the board. And because of that, I don't know if this is a situation, there was an old expression, a stupid expression, because I didn't really necessarily always agree with it, but sell in May and go away. That was one of those expressions, and there are so many. But I think the reality is that this is a much different year, and I'm not sure that I would be going there. I'm just looking at the paper. We try to read the options in terms of how they indicate what sentiment's looking like for trade. And I have not seen there a reason to be walking away from the markets and then coming back. But everybody's got their thing. Pete, hi, with the stimulus package in Congress, are you surprised that the markets did not take off to the upside? Not really, because this was something that's been worked on. We've been talking about it. Everybody knew. I mean, how many times did we all hear some of these numbers that now look like that's the reality of it all? And a lot of that started to get, I think, baked in to some degree. We probably would have had a little better reaction had it not been for this virus and some of the changes that are going on there. So I think that certainly did play into that factor as well. Pete, is FUBU ready to pull back? I have no idea. The reality is we've seen the option paper and it's come in there day after day after day. And this is a stock that has moved rapidly. We all know that. And it had a ripping move to the upside over a couple of trading sessions. But we certainly haven't seen folks starting to buy any puts. We certainly haven't seen the selling of calls. And I think that you can never quite get that timing just right, obviously, but you've got to be disciplined. And that's something we talk about all the time here at Market Rebellion. You've got to be disciplined. I've been in FUBU and I've trimmed FUBU and I've sold out of FUBU and then I get back in. And matter of fact, I'll give you one today. I'm back into PayPal. We had some option activity in there today. I had been out, and I talked about this the other day, in it, out of it, in it, out of it. Now I'm back in it. So I let the options sort of dictate, especially people say to me, what are you doing when you're preparing? Well, and because I mentioned the other day that I was preparing, and it was a little bit later in the evening, and just preparing for knowing where stocks are, where they went, where they've been, where they're going, and knowing a little bit more detail about what the fundamentals look like. All of that is just sort of that research that I think that each and every one of us needs to do to really understand the companies a little bit better. And then when we see the option paper, it can kind of give you a little bit more of an understanding of, does this make sense? Does this not make sense? And all the rest of it. So there's I think it's a little bit more complex than, hey, there's unusual and you just buy it. I think there's more to it than that. Let's see. Do you suggest that we primarily buy calls that are deep in the money and a few months out? No, I don't. That's up to you. But from what we see, most of the option activity that we see that indicates the potential for a move to the upside, potential move for an upside, is out of the money or at the money calls, but rarely is it in the money. And it doesn't mean that that's a negative. It's just that we don't see nearly as much of that. When we do see some of that, oftentimes that can be a stock replacement. A stock has ripped to the upside. Somebody wants to take off their stock, but they still want to participate and trade it as if it's a stock. And people will position that way into the options at times. But no, that's not something that normally, and I'll tell you, from the unusual aspect of it all, it's far more consistent to see option paper that is either at the money or out of the money, or in some cases ridiculously way out of the money, that sometimes doesn't seem so ridiculous when we see some of the moves that we've seen of late in a lot of these various names. We'll get one more. Still like materials and energy? Absolutely, I do. First of all, the implied volatilities in those is very inexpensive, gives you great opportunity for upside, and we've had those runs to the upside. It doesn't necessarily mean it's over just because it's paused. I think that's healthy, and that's the way the markets oftentimes are. You get these incredible moves to, I mean, Apple, just use that as your perfect example, I guess. You get this extraordinary move to the upside, and everybody was talking about certain stocks, you know, the big five and all the rest of that. You get an extraordinary move to the upside, it goes to pause, and then everybody goes negative. I'm not sure that that's the right reaction, because I think it is a healthy for the consolidation period of some of these, and that in that consolidation doesn't mean they'll even go down a little bit, but I think that's healthier. And we all know that things are not going to go up in a straight line. Even Amazon, even Apple, even any of these names, there are pauses along the way. And I think that's very, very healthy. Folks, I know everybody's got to run. Appreciate last night. If you didn't get a chance, try to watch the rebroadcast today. Gene Munster was absolutely outstanding yesterday on our round table with the Market Rebellion gang. So you're going to want to check that out if you can. And I look forward to seeing you tomorrow. Have a great day of trading.